Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham, and I thought I'd reach out with a brief market commentary for the month of September, as well as a little bit of a preview of the first couple of days that we've had here in October. Month of September was a relatively calm month. S&P 500 was up about 1.7%. But it's a little bit like a duck floating across a pond that looks very serene with a lot of churning water under the surface, if you will. First couple of weeks of the month, we saw a rotation from growth into value. So you saw some of those high-flying tech names that might be in your portfolio rotate into some relatively more boring cyclical names. And then we actually saw that kind of unwind and reverse a little bit towards the end of towards the end of the month. So an interesting month, not a super volatile month if you just look at the headline price action, but there was obviously some stuff going on under the surface, which bore monitoring. The first couple of days of October have seen a lot more volatility. The headline anchors on CNBC were running around saying that, in the first 2 days of October, we had lost all of the S&P's gains for the month of September, which is a really nice way to dramatize a 1% move in the S&P 500, which isn't really that uncommon. We've seen a couple of what I would call growth scares emerge here earlier in the month. We had an ISM survey, a manufacturing survey, and a services survey that came out much weaker than most people expected. That's not hard data, it's survey data, but it does flow into hard data later on down the road. And we also saw a payroll number that was a little bit weaker than expected. Do these point to imminent signs of a meltdown? No. Do they point to the fact that the U.S. economy is slowing a little bit? Yes. That's been kind of the narrative that we've had all year, where the U.S. economy is growing a little bit more slowly than it was in the prior quarter or even in the prior year. But it's not something that I get overly concerned about from an overall equity market perspective. There's still no evidence of any type of recession on the horizon. October does tend to be a pretty volatile month. But certainly the volatility that we've seen in the first 2 or 3 days isn't anything that's abnormal for the market, particularly during this time of the year. If you have any questions, please feel free to either reach out to your advisor or myself. And with that, I will hope you have a wonderful day.